Hey everybody. Had a bunch of issues with the YouTube yesterday. If anyone can check it out and make sure it's working properly. I think I did the adjustments that fixed it already before the meeting started. But if anyone can check, it's something that I would appreciate. How's everyone doing this afternoon? Market sell-offs. Did we forget what these feel like? It's a quick slap in the face sometimes to remember YouTube is good. Thank you, Bill. Appreciate it. What's up, Pam? I'm glad at least we got Pam and Bill listening. Mike Reed's here too. What's up, Ben? Sharir in the house. The moon is out tonight. What's up, Tom K? Cold smoke. Can't wait for that snow to come back. What's up, David? Hey, what's up, Chris? All right, thanks, guys. It makes me feel better knowing somebody's listening. What's up, Juan? Welcome to your trial. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is pretty much unchanged. Switch this over. All right. So, how'd we close? Wow, it feels like so much more than 0.7%, doesn't it? SPY's down 0.66%. Guess we bounced a little bit from the close. Wow, feels like a lot more than that. Q's down over 1%. Feels a little more right. IWM down over 1%. 1.14% here. Also feels a little bit more right. Downside continuation today was expected. The open was a little bit tricky. We were trying to balance some things. Where's Pat's note? I still have it exactly where I left it. We're trying to balance some things because the market technicals were looking just very bearish to me on the daily charts coming into today's trading session. But we had to compete with the short-term tactical here being in the green zone. And for me, what this means is that it does not necessarily mean that the market's a buy. It usually means to me, don't press shorts, especially don't press shorts off the open. What we've seen in the market on both sides of the market, but I've got plenty of examples, particularly on the long side that I can remember, is that we will stay sometimes in that green or in that red zone for 2 or 3 days before we're able to get an appropriate pop out of it. But usually when the market's set to open, like down or flat, and you were closing in the green zone, as an example here for short-term tactical, it does not mean that the market can't go down. It just usually means that the market really struggles to go down in the beginning of the day. So before I read Pat's note, when I was just doing my technical analysis research, which is usually where I start, I was feeling really bearish. And my initial thought process when I was building out a game plan for myself was I should go after this market to the short side. I should short things off the open and see if we can get hard downside early momentum. But then as I was able to get more data, Chris providing some data from the oscillator and his thought process, Pat providing his morning note, looking at the short-term tactical, I just adjusted my thought process a little bit and said, well, look, it's not that we can't go down, it's just that usually if short-term tactical is going to be in the green like that, we can go down, but it's usually more of an afternoon sell-off. The beginning of the day, the way that short-term tactical works is it satisfies itself through time and price. The same way, when I view extension, which I usually do on a little bit different time frames, I think, than what short-term tactical is doing. When I view, the market getting to like that $10 of upside or $10 of downside extension in the SPYs or Qs as a signal to really begin to look in the opposite direction. In theory, it could satisfy itself just by going sideways for a few days. That moving averages catches up. That's also called a bear flag or a bull flag. It's a time correction instead of a price correction. And then you actually get continuation in the direction that you're actually moving, and the counter trend setup doesn't work as well. So by the time I fully did my research and I was prepared to do the morning meeting, my thought process was really to try to be more hands-off in the beginning of the day. Maybe find some shorter term scalps that I could focus on, small time frames that I could focus on, but big picture I was still feeling bearish, but did not want to hit things early off the open. And that's kind of how things worked out. We got a great initial pop here for the first half hour or so. First wasn't even really half hour, probably 20 minutes or so. Great initial pop in SPYs. I remember really looking at this 444 in the SPYs, and I remember saying as we bounced in these first 20 minutes, like, hey, this is a good bounce, but all it's doing is satisfying that short-term tactical, which if anything enables us to be able to roll over. I need the bulls to really prove themselves. How would the bulls prove themselves? I want the SPY above 444. I want the Qs above 367, and I want the IWM above this like opening high of this 189 that it was able to do on its bounce. And this IWM, this first 5-minute bar on the Russell, was a big signal also. Any thought process I had towards an opening breakdown, opening momentum selling, the second I saw this first 5-minute candle forming on the IWM, I knew that that was just not correct, and it was just going to be a matter of, you know, how much can we bounce, can bulls actually prove themselves? And all we really got was that, you know, beginning of the day opening bounce that satisfies the short-term tactical, and again, without recapturing any key levels, it really actually sets us up to roll down further. It was also just a day 2. Our daily chart's not really extended enough yet, so it just seemed like it was way too early for big picture longs, but some off the open, you know, scalping type longs certainly worked. And then when we were going sideways here between 10 and 11, it was just a matter of, can we recapture the key levels intraday? Can the SPYs get above 444? Can the Qs really get above 367, which they started to do at a certain point around 10:15. The problem with when the Qs were trying to prove themselves and when the SPYs were testing 444 was the IWM. The IWM, which gave me the most amount of bullish hope or excitement in the first 5 minutes of the day. When this thing weakened out the way it did, when it overshot 188.50, you know, you have 2 great opening 5-minute bars. You get a little bit extended on the 5-minute chart. You want to have a little bit of a pullback to the moving averages. You want to retrace a little bit of the opening up move. That's all fine. But one of the things I like to pay attention to when we have those big moves, not that this was that big, when we have one of those upside moves, is how much have we retraced? Because a retracement to 188.50 and getting a pivot low there that works its way back up to new highs is fine. But once we start getting below and holding below 188.50 and, you know, retracing more than 50% of that up move, it becomes a little bit more worrisome. And then this candle here at 10 a.m., it just was so bad in the IWM. The 10 a.m. candle, the break of the opening low, this, you know, bearish consolidation that was forming between 10 and 11 in the IWM. Between 10 and 11, that's when the SPYs and Qs were still trying to prove themselves by getting above those levels. There were some big cap tech stocks out there that were trying to hold in and trying to prove themselves. But without the support from the IWM, whenever we have an intraday divergence between the Qs and the IWM, most of the time the IWM is the winner. Not always. We saw there was just even one day recently where the Russell was weak off the open and the Qs were strong off the open, and the Qs eventually dragged up the IWM. Most of the time, it seems that it works the other way. Today was no exception. We never were able to really get above and hold above the key levels that bulls needed to get above for this to be anything more than just an opening oversold bounce, price time correction that satisfies that short-term tactical, maybe satisfies the oscillator a little bit, and then again, if anything, sets you up for the further breakdown. And that's what started to happen in the afternoon. 11:30, 12 o'clock, we really started to grind lower. Market got a little bit sloppy. They bounced this market decently hard right into 2 o'clock into the FOMC minutes. But that was really just a further sell setup. FOMC minutes gave us volatile, choppy price action, which is exactly what we kind of expect. You know, years ago, the FOMC minutes, when they would come out, would reveal sometimes new information, and the market might give you a real move on that. These days, it seems, you know, the Fed is just generally so transparent that you don't really get new information on the minutes. So what we usually see is just a whole bunch of kind of choppy, volatile action for, you know, a half hour or 45 minutes or so, and then continuation of what the market already wanted to do anyway, which in this case was down. So you got, you know, this action here between like 1:30 and 3 o'clock was probably a little bit tricky. The bounce into the minutes, the post-minutes price action, but then that just, resolved to the downside for continuation, and we closed on lows. So at this point, I'm all long. I did a pretty good job shorting at highs. I covered those shorts maybe a little bit early, but I'm fine with it. The idea is really to kind of build back into my longs as we approach this, 435 area, just very broadly 435 area, which has really been my target on the downside from the beginning, as when we were at highs, and my thought process began to switch to bearish. At this point, I would love a gap down tomorrow. A gap down tomorrow, I'll wake up, I'll log into the computer, and I'll be down P&L. But my position sizes right now are all appropriate, so I'm comfortable with where I'm at. And I think that a down open tomorrow, unless there's any major news that hits that I'm not expecting, becomes potentially a pretty big intraday buying opportunity. Maybe not the first second that the market opens. It might take 15 minutes of washout selling on a gap down tomorrow before that setup is really there. But we'll finally hit a point if we can. Most likely, short-term tactical is not only in the green, but even deeper in the green after today's trading session. We'll see it later tonight, tomorrow morning. The oscillator closed here, according to Chris, at negative 72, which is already oversold. Negative 80 plus is where it gets really extreme. And we would start to be getting closer to my areas of extension, right? So right now, the SPY is at 445. If I can get this market down to like 437 or so on a gap, if we can get like a $2 gap down tomorrow plus some opening selling action that can get us to like 436, 437, it also begins to coincide with what my target has been on the short to begin with. That's like the type of setup that it's always scary in the moment, but it's got a very high probability of upside retracement when you hit those multi-level extremes of short-term tactical plus oscillator plus approaching $10 extension from the ADMA on the daily chart, where I'll start to look to be more aggressive. Still recognizing it could be a day 4 situation, not a day 3 situation. We need to keep that in the back of our minds. It's possible that we get a similar situation where we get an opening bounce tomorrow, satisfy short-term tactical, roll over into the close, and I'm having the same afternoon meeting and morning meeting, tomorrow and the next day, and then really getting my buy setup back through like a 435 with even more extreme downside extension into the ADMA. But if we can get a gap down tomorrow, that's when I'm going to begin to finally look to be more aggressive to the long side, when I've been really trying to manage my positions, which are bigger picture and have been generally pretty profitable for me, but really be patient into this down move, and for a while also be short. I was net short for a while, and then finally coming into the area where I want to be more aggressive. So we'll see how we gap tomorrow. The market has this thing where it loves to disappoint, so prayers for a gap down tomorrow. Though a gap up, sometimes happens just because the market doesn't like to make things that easy. And then if we have a gap up, it's going to be a little bit more tricky of a morning meeting. I'm trying to figure it out, because the gap up in and of itself would satisfy the oscillator to some degree, the short-term tactical to some degree, would be less extended, and then it's just, do we get a rest day tomorrow after a gap up that then is actually a setup for even deeper selling than I'm initially thinking? That could also happen. So, we'll take it one day at a time. I generally like to do my pre-market research pre-market and not after the close, just because I've got more information in the morning. I can see, how we're gapping and build my game plan around it. But we're hitting the point here where a gap down tomorrow gives us a day 3 and gives us some real extension to finally begin to work with. So we'll see if we get it or not. But yeah, the game plan today, the thought process today, based on the morning meeting, was pretty on point. Doesn't necessarily mean it's easy to execute. For me personally, I execute best off the open. I would prefer, if the market's going to sell off, that it just does it with the momentum right away in the beginning of the day. But, again, market doesn't do all the time what I want, and it's not a matter of me forcing what I want on the market. It's a matter of me listening to the message that the market is providing and that the data and information is providing. And by doing that, you could have hurt yourself shorting heavy off the open today. And by paying attention to the data, we were at least able to avoid that. We were also able to avoid, I think, being too aggressive to the long side and not overly trusting that opening bounce, even if the afternoon sell-off itself was probably a little bit trickier to actually capture. So, yeah, that's all I've got for you guys. Happy to answer any questions anybody has. Not seeing anything in the VTF yet, so feel free to populate those questions. Try to hop over into the YouTube here at the same time. Thanks, Robert. What's up, Mike in YouTube? In the YouTube, good to see you. What's up, guys? Any questions? Anything at all? Did I miss anything in the VTF closer to 4 o'clock? Doesn't look like it. There's Rex. There's Rex. Rex is always good for a question. Mike coming in with one as well. Cool. So let's start with Rex. I was looking for Apple short through 177 this morning. I understand the short-term tactical is in the green zone, but I saw Apple failed to get above yesterday's close and failed back down to 177, so I decided to take very small short on Apple at the first 5-minute candle, and it got stopped. Okay. Yeah, I mean, we talked about that in the morning meeting, right? We said that I felt that the best idea was to be patient off the open, but you could choose to be aggressive and short the break of some of these key levels like Apple 177 or Netflix through yesterday's low or Microsoft 320 if they're breaking off the open. But that if you took those, you want to take them small, and that you want to have your stop tight and just recognize that you can get taken out of the position. So it sounds like that's what your thought process was. That's how you approached it. You took your trade small, so all of that seems appropriate to me. I actually bought 177 real light off the open to see if we could get that opening bounce, and we did, and I sold some at 178, and then it rolled back down. Second part of your question. Then I saw the SPYs and the Qs were upticking along with the IWM, and I took NVIDIA long at 935. Seeing that NVIDIA was relatively strong pre-market, and NVIDIA ended up being weak and getting pulled down by AMD. It was relatively strong pre-market. NVIDIA was relatively strong yesterday. It was breaking its opening highs. Okay, I like everything you're telling me. So I thought I could get some bounce for a scalp along with the green short-term tactical. So I decided to take a long trade on the 935 candle with medium risk. It turns out I got stopped also. Yeah, I think that the thought process was sound. Unfortunately, just the stop wasn't any good. I think that the only thing that you could have noticed possibly was the AMD weakness to drive NVIDIA a little bit lower. I'm reaching there. I think that everything that you're saying here about seeing the market bouncing, seeing the Q strength, seeing NVIDIA strength from yesterday, puts NVIDIA for if the market is going to bounce, then going to NVIDIA for the long trade. I think it makes a lot of sense. It just so happened that for whatever reason, semiconductors were really weak. And if anything, one of the most impressive things in the first 20 minutes, half hour of the day today was just how weak AMD actually was. When the market was giving its bounce, that opening bounce, satisfying short-term tactical, AMD was just getting smoked and going straight down through that 110. So again, right thought process. I think overall, just semis were just weaker today. From Mike Reed, can you explain briefly your take on how TLT affects general market dynamics? Sure. So the way that treasuries affect the general market dynamics is actually something that's constantly evolving. It is never, it's different at different times, and it's more based on what's driving the move in treasuries in conjunction with equities in any given period of time. What do I mean by that? sometimes TLT going up is bullish for stocks because it means interest rates are going down. So it creates an easing impulse, which has a bullish effect on stocks. Unless TLT is moving up because it's a fear trade. Because when the market gets really, really scared, what do people do? They sell equities and they go into cash, they go into bonds because they're viewed safer. So sometimes, treasuries moving up is bullish for equities, and sometimes treasuries moving up is bearish for equities. It really more is the market scenario that you're in currently and the reason why that's actually happening. In this environment right now that we've been in, where this TLT keeps moving down, which means interest rates keep moving higher, and that's having a tightening impulse on equities, that's the main theme of this time that we're in right now. What we see sometimes in more bearish markets, which, we haven't even had a 5% correction in the S&P yet, but what you see sometimes in more bearish markets is at a certain point, you actually might see TLT bounce and the market still can't move higher. And that's just because the theme of the equity market has changed so much that people are so scared. I don't think that we're in an area yet, again, the S&P hasn't even pulled back 5%, where people are extremely fearful. And you can look at, some more of the sentiment indicators, not really short-term tactical, some more of the bigger picture, like Bank of America sentiment indicator that Pat likes to have in the morning note also. That's nowhere near to that extreme fear, extreme bearish situation. But if that was there, like right now, tomorrow, most likely if TLT can bounce and interest rates are going down, it's going to help stocks move up. But if, we hit a point here where sentiment just gets really sour, you could actually get a point where you get a bounce in treasuries, but it's entirely a fear trade because people are like, get me out of my stocks, and they're selling and selling and selling stocks, and then they're just buying up treasuries because it's viewed as a safety asset, and that's not necessarily bullish for equities. It might be the beginning of, a contrarian trade where sentiment's becoming so bearish that we want to become bullish again, which is similar to what happened at the end of 2022 and the beginning of 2023. But we're nowhere near that point. So for the moment, the current dynamic, and I just want you to recognize that that's something that is constantly changing over time. For the moment, the current dynamic is TLT down means interest rates higher, which is going to be bad for equities. I have found over the course of the last couple years now that what the market hates more than anything is really fast moves in treasuries in short periods of time. And that's to the upside and to the downside. It likes a more stable treasury market, and the equity market seems to be able to adjust to that. It seems like wherever the interest rates actually are, the equity market adjusts to it and can begin to work its way higher, as long as the rate of change in rates isn't too insane. So also something to keep in mind. I would love a short-term bounce for bulls for the equity market in treasuries and interest rates to move down a little bit, but I would like that bounce to actually lead to stability after that more than anything. I don't need TLT back on 108. I would love TLT back in the upper 90s or $100 and then go sideways, because the market, I think, will be able to adjust. You can't find the oscillator on Lightspeed. Chris has it. Josh has it. You can just kind of ask some of those guys during the day, and they can provide it to you. Mike L here saying you can look at stockcharts.com. For Mike L, what would be the playbook for a big gap down? The ones that held best are Amazon, Google, XLE, or the ones that are washed up most, like PayPal and Baba. So I would focus on whatever's relatively strong in that moment would be the first thing that I would say, but we do want to pay attention to what I think has actually been best now. So like Chris was mentioning that Microsoft held a little bit better. Like anything that wasn't really able to break its opening lows today. Like you see the Microsoft opening low here through 320, which is the level we talked about, but it never actually broke that. Anything that was able to do that should broadly be on the radar for a gap down tomorrow, I think. And at the same time, though, you know, I actually like both, and I probably will want some exposure to both. I want some exposure to a name like Microsoft that wasn't able to break its opening low and is holding above levels and is showing strength. I'll probably also want exposure to something that is very extended to the downside. You know, like some of these names that we keep mentioning, you know, we keep talking about, like I keep bringing up like the Unity, and I said it a few days ago, like in a vacuum a few days ago, I love Unity for an oversold bounce, but, you know, maybe that oversold bounce is actually like at $34 because the market needs to break down further and it just, you know, continues to sell Unity. Or I know Brandt is looking at Airbnb with it, which is a similar situation. You got some of these stocks on like day 10 down, day 12 down at this point, and they're pretty extended to the downside. So I like the idea of looking at some of those maybe for an RDR. I also like the idea of, you know, kind of going after your strength, like a Microsoft. Yeah, Amazon's been super strong overall on the daily chart. It's filling the gap a little bit. It broke some support today. We even talked about you could, you know, look for a shorter, like short scalp in Amazon. Tesla would probably be a little bit more in the extension story here. You know, Alibaba's tougher. Chris and I both like Alibaba, but it's a tougher one to execute. Yeah, so I hope that helps. From Dave S. Growth sold off hard last week, but is hanging in there relative to the rest of the market this week. Yes, some of the names. Palantir is one that I'm in also. I was really happy with how Palantir I can handle the pain. I was really happy with how Palantir held in today. Really happy with it. It still needs to prove itself. That ADMA is catching up, which is scary. I need this Palantir back above 16 soon. But I was pretty happy with that strength. But I think it's selective growth issuances, because you can find Palantirs and you can find Unities. And Upstart's like somewhere between the two. Like Upstart's probably held in better over the course of the last few days, but I think that's because this one was extremely extended to the downside as it approached that $30. So I'd be a little bit more careful with an Upstart as that ADMA on the daily catches up and it's not as extended, and it's doing it through time, not price, which, you know, is okay because what the market's been doing, and this thing probably would have been able to give a much better price correction if the market wasn't a disaster. But the market's been probably holding this thing down from a snapback to the ADMA, snapback to equilibrium that probably would have happened otherwise. But reading your actual question here, does this happen often when they come for high beta stocks first and then sell the rest of the market as the down move continues? It certainly can. We saw that in the 2022 bear market. You know, it's really worth it to be a student of history. You guys want to remember this stuff, I think. So a couple things I just to note real quick, and I've talked about it in the past. So the S&P and the NASDAQ literally had their high on January 1st, or the first trading session of 2022. This was the high. This was the absolute high. We made this all-time highs. It is the first trading session of January, and we never looked back from moving down, basically from that point on, right? Bear market all the way down. But even though the S&P and the NASDAQ actually made their high on the first day of January, I consider the market high to be November 2021. That's when the IWM put in its high, and that's when the average stock on the market put in its high. Similar, but different, the bottom in the market was October 2022. I consider the real bottom of the market to actually be May 2022, 5 months ahead of time. And you'll find, if you look at your growth stocks, that most growth stocks bottomed in May, June 2022, even though the market bottomed in October 2022. And that's because of market cap weightings. Your average stock, the average stock put in its bear market bottom in May, June 2022. But if you remember, into October, that's when Apple, Amazon, Google, Microsoft, they were getting destroyed after those earnings reports, and then they put in their bottoms more or less in mid-October. I remember this vividly, just typing up Amazon first. And this actually got hit further because of an earnings report at the end of October. But, you know, this thing got, you know, whacked to this low in mid-October. Google, oh yeah, this one too. Both Amazon and Google, I'm remembering now, made those new lows even as the market held in after their earnings reports. Apple put in a major low in October and then actually made a new low into the end of the year. So it was really just these big cap tech stocks. Netflix a little bit different. Meta, this huge gap down on that earnings report at the end of October, beginning of November. I remember having Meta stock from, I think, below the low pre-market one day. 88.09 is the low. I think I had stock at like 80. I actually think it was actually after hours on the earnings day. I had stock at like $85 in Meta. You know, I think I was out of my whole position by 120. Thought I was a genius. Yeah, not bad. But the average, you know, in my mind, the start of the bear market was November 2021. The end of the bear market was May, June 2022. But technically, if you look at the S&P, the actual peak was January 2022, and the actual bottom was October 2022. So, you know, it's worth being a student in history. It's worth paying attention to that stuff. And when it circles back to your question, it doesn't have to be that way, but it can be. I think that they usually sell garbage first and quality last as a general rule. You know, there was like no one left to sell at a certain point. I mean, I know some of these names still went down. And maybe Carvana is not the best example, because this one was May 22. This one still actually made new lows post that area, though it gave a big bounce off that period of time. But I don't know, if you just type up a ton of these names that got smoked, for the most part, they didn't really make new lows. I'm just trying to think of, I don't know, path. I'm not coming up with any good examples that are actually supporting what I'm telling you guys. But like, you know, at a minimum, the rate of selling, just typing up SoFi now as an example, which also did make a new low into the end of the year. That's really when things began to bottom and base. You know, Shopify, like, you know, pretty much bottomed in May. I know it made a new low, but bottomed and based there. And then it was big cap tech that led the actual selling down from that point. So, yeah, it seems like they sell garbage first and quality last. But I would say, even though you're pointing out Palantir and Upstart, when I would take the Palantir with the Upstart with an asterisk, and two, there's other growth names that you can point out, like Unity or Airbnb or others that are still selling. Cool. Great questions in the VTF. What do we have over here in the YouTube? Chris K took TSM off the open long. What the heck is this? TSEM. Oh, this is Tower Semiconductor. Is this on earnings? Did I miss this entirely? I might have missed this entirely this morning if this was on earnings. I started exiting when the EDMA on the 5 caught up. Never looked at that before. Oh, perfect. I love that. I love that. Yeah, I love this trade on both sides. You know, the big gap down's got to be a little bit careful, because sometimes people are trapped and there's like forced selling that's continuing to sell this stock off in the beginning of the day. So you got to be a little bit careful with the opening long. But generally, I like the bounce back trade into the ADMA, and then I like the short trade there a lot. When you get the setup into that snapback on those big earnings gaps into that ADMA, and you get like a real pivot looking candle, a shooting star looking candle in that moving average area on that first touch, a lot of times that leads to a rollover, which didn't really happen here. The stock went sideways for a while. It looks like it needed the ADMA on the 15 to catch up before actually creating the rollover. But yeah, I love that. Absolutely love that. From Robert, opinion about Target earnings. They beat EPS nicely. They lowered fiscal year guidance, I assume you mean. Yeah, so I was very surprised that Target was up this morning based on how much they missed guidance. Any interest in longs versus the 125 support area? What did they end up doing with this thing? They sold it down pretty big. We closed up $3. I don't know. I don't have a strong opinion for you on this one. I'm staying away. If the thing had gapped down really big, I might have looked at it. But I was very surprised to see that they gapped it up. I'm not surprised to see they sold it off. I saw that they beat on like EPS or whatever, but the guidance was such a bad mess. And it looked like there was some improvement in the margin, which I think also like the market liked initially pre-market and helped that gap up. But that guidance was so bad. It was so bad. So I'm not surprised that they sold this thing back down. I'm probably going to avoid it for now. I think if you want one to be in that's retail, this TJX earnings report was a monster. I know it's not a great trading vehicle. It's probably something that's a little bit bigger picture of a swing trade or an investment or something. But the stock's performing well. It's at highs. It's crushing it. It broke out today, and the numbers were excellent. From Mike in the YouTube. I attempted to cheat on the IWM shooter at 9:45. If I remember that. Oh, yeah, up there. And pretty much spectated the rest of the day after seeing those 10 a.m. candles. I definitely can improve on flipping my bias when I see the price show signals. Yeah, so I'm all for like jumping into a trade a little bit early, or we call it like cheating on the setup, getting involved before the setup actually triggers. I was just really nervous about the market at that point still, but I was pretty happy with how the IWM was holding in. I think I was kind of communicating at those highs there, like, let's not have any new longs. Let's like watch and wait and see if this market can actually give continuation. But I understand your thought process. I don't hate it. From Robert, going back to X, after yesterday's rest today, another company, MT. I didn't see that. MT came in. Didn't that? Which company came out at what did happen today? I missed that news today. I don't know where I was. Maybe I was making lunch. Which company was it that came out at 250 on Monday? That's when the second company came out. So I guess the third company came out today, MT. I missed that intraday. That they're also bidding for X. Day one, and today we did not get a break of 32 to 32.50. Does it mean we found an X high value price? Not necessarily. No, I don't think that's necessarily true. And again, it's just the only example I really have here right now with this SSYS. It's not comparing apples to apples though, because this is such a different company. There were points here where I think that drama started back here at the end of March, and it looked like 1650 was resistance, like an $18 or $18.50, I think, might have been $18 at that point, buyout offer. And they rejected it, and the stock sold back down. But then they raised it, and that's when you get this jump here. Is they raised it to like $20 or something, and the market sold it back down. And then they announced that they were going to try to do like a hostile takeover basically, and then it went again, and then that hostile takeover maybe even a higher bidding price. So that $16 ceiling, which I feel $16.50 ceiling, which I feel like is kind of the equivalent of that X 32.50. Did eventually break as the bidding for the stock became more aggressive, and then at a certain point in here, 3D Systems also got involved, and then you had two companies that were both bidding, and then honestly, when it got to above $20 or into $20, I liquidated my position entirely because that's really what I was looking for from it, and I haven't looked at it since, and I don't really know what the latest updated drama is on SSYS in this down move here. It's come all the way back down to, the post-drama support area of like $14. So I haven't really been following it, but no, I think that, especially if you've got 3 players involved now, you could get a bidding war. It could be $40 plus that this thing gets taken over at. So no, I don't think that that's a ceiling. from Chris K on TSEM. It wasn't earnings, gap-like earnings, but it was an acquisition news. Okay. Thank you. For sure. Glad you're enjoying it. Press the thumbs up button. Kevin G. Target felt like Disney to me. It moved independently until after 11 a.m. with the market. Yeah, just trading in its own world for sure. ESMK was the second company that bid for it for U.S. Steel. I don't think they're public on the U.S. listing. But yes, for sure. Get the chart up there. Alright, we got through YouTube. Switching back over to the VTF to see if there's anything new in there. Which for some reason is now not loading. There it goes. Why is Netflix? S-Mark, yep. What do I think of Datadog? Datadog held in great today. At one point when the market was looking strong, this thing looked fantastic. I know Rock called out this pattern in here. Strength, ADMA catch up, inside 5 at a bull pennant for a break higher for trend continuation. I like it. It's just this gap down off of, I think that was its earnings report. The ADMA's caught up, so it's in a tricky spot. Oh, I forgot. Is Redler today? Is it Wednesday? All right, totally forgot that was happening. So I'm gonna end the meeting. Tune over to Conversations with the Trader with Scott Redler on LinkedIn, which is ongoing. Have a great night, everybody.